May record. Let me open trading view. All right. So yesterday I did pretty well trading, and then I ended the day with losing everything that I made in the week. Right. It happens. It's also part of trading. So I took it cool. I wasn't happy. It was painful, but yeah, it's a lesson that I had to learn. Okay, so yesterday what happened? All right, so I started the day pretty well. Okay, started it very well. All right, already I was bearish. Okay, I was thinking bearish because price had created this engulfing. Okay, I was thinking bearish because price had created this engulfing. So on this particular engulfing, there was a 30-minute engulfing also that was created somewhere here. Okay, there was a 30-minute engulfing. Yes, that was created here. All right, so this was an entry. This was an entry, but I entered here on the 30-minute engulfing. But this is a pullback that was an entry. All right. So now, during the day, I think we sold this level. Okay, using the QMC or so trend line.
No, maybe now if they don't ask me, no will just tell you anything.
Okay, so a trend line. All right, so I took a sell from here. Okay, a sell from here, and I was expecting it to break this low. Okay, so price didn't break this low, but I had already taken all my profit, and then we broke this. So after breaking this trend line, I became bullish, right? I was bullish, but there was a 4-hour SNL here. That is where I had a loss. So there was a 4-hour SNL here with a miss. Okay, with a miss. All right. So here, the reason why I lost this trade was it was a very simple reason. It is not as a result of the failure of my strategy. Okay. It was a failure of me personally to wait. Now, the rule of that I use in trading SNL, when there is an SNL level, I use a simple rule in trading. When it's a 4-hour SNL, I want a 30-minute and to close below, right? So a 30-minute candle has to close below it. And now when it closes, then I refer to a 5-minute and I want to see a 5-minute breakout, okay? A 5-minute breakout. So in this case, there was no 5-minute breakout. There was no breakout here. Okay, there was no bearish candle that broke out. So there was no reason to take this sell. But when I said that I was waiting for 30 minutes to close, I didn't wait for the 30 minutes to close, and I went straight to the 5-minute, and I saw a 5-minute engulfing. Okay, so I took a sell from here. I took a sell from here. All right, I took a sell from here. My stop loss should have been at the top here. Okay, my stop loss should have been here, just here, and I was supposed to even cut the trade after this candle closed. Okay, after this candle closed inside here, I was supposed to close the trade. I didn't do that, and I held the trade. I held it. I really held it. I have to here. Okay, up to here, and I had to close. So I closed. I think I held it more than that. I think I held it up to this level, right? So I held it, and I lost that amount of money that I showed you guys. It was painful, but yes, that's just by the way. It's and this is a loss that I took. Not, you see, it is better when you lose and it is a strategy that is not working. When you lose and the strategy so, but when you don't follow the rules and you lose, it becomes a personal mistake. Becomes a personal mistake. Okay, so that is how my week ended. All right, so let's talk about entries. As I said, so I've taken you guys through the buy strategy. We've done all the SNLs. Okay, so we did SNLC1, we did SNLC2, we did QMR, QMC, and QMM. All right. Now, yes, this is a whole setup, but setup are also entry techniques. So that is it. You should understand that these things can also be used as entry. All right. So when was it? I think on okay, the day before the day the news happened, this particular day, where is it? Here. Okay. When you traded this news here, I got this news from the top. Okay. But all the money that I've made throughout the week, I lost all of them in one trade. Okay, so now I got it from here. But when we got here, let me put a rectangle around that level and color it. Okay, when price got here on 1 minute, okay, there was a QM, that's a G lamp cord. Okay, and I was waiting for confirmation to take it. Where was it? Where was it? Is it here? Okay. So here we called an SNLC2, right? Lower time frame SNLC. So this is SNLC1. This SNLC1 that you're seeing, okay, on 1 minute, it was an SNLC2. So lower time frames setup can be your entry. So we see we got this one up to here. And here, there's a QM. Okay, there's a QM here, which was called. But I was saying that let's wait for this one to break. Once price breaks this one, then we can look for a pullback. Price never came back. So we never got into this trade. And then it went up, 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 up. Okay. So you see that here, this 1 minute QM is not enough. Okay. This 1 minute QM, you have to use cause and effect. Has to be caused by something. Where did price trade into to create that 1 minute QM that we're taking? Okay. If you have full confirmation that this one minute QM is good, you take the entry. So that is one entry. So the entry is that the patterns that you've learned, okay, can be used on the lower time frame for entries. So this is SNLC1, right? So if assuming I have a higher time frame point of interest here, price trades into the higher time frame point of interest. It trades into the higher time frame point of interest, okay? And then it creates a SNLC1. This SNLC1, if it's on a lower time frame, let's say 5 minutes, 3 minutes, 1 minute, this becomes a lower time frame entry. So this becomes an entry. So I can sell from here. Okay. Now, in this case, this is a lower time frame. Now, on a higher time frame, I have a weekly SNLC1. Okay. That weekly SNLC1 is different from this 1 minute or 5 minute SNLC1. This weekly SNLC1 becomes a setup. Okay. If it's a setup, then I'm waiting for price to come to it. So price comes to it. Price comes to it. Okay. And does this. And create an SNLC2. You see, I will not be able to enter on this SNLC1 because it's a weekly, right? So I have to wait for reaction. That reaction has to give me one of the Bystra Fantastic 5 patterns. When I get that pattern, then I can say that this is a sell. Okay, I can say this is a sell. What is the stop loss of SNLC2? It is just at the top here. Okay, so SNLC2. Right? SNLC2 and the continuous. Okay, so in this particular case, we are saying that Patterns on higher time frame on HTF are setups, okay? And patterns on LTF are entry points, okay? So that concludes it from the Bastrap perspective, okay? So conclusion from the Bastrap perspective. Now, this is first thing. We've talked about this. So you can use the Bastrap setup to be entering trade on the lower time frame, and that's what last week's video was about. Now, if you are not using this, then you can use the EG and EF. EG, EG, and EF, okay, as entry techniques. And EG and EF have to happen on the same on that 5 minute time frame. So usually I use 5 minutes engulfing and engulfing field. Okay, and let me show you what is 5 minute engulfing and engulfing field. Okay. All right. So when we look at 5 minute engulfing and engulfing field, this is a 5 minute engulfing. You can see we have sorry. Uh, you can see we have an engulfing here, a 5 minute engulfing here. You can see we have a 5 minute engulfing here, and we have a 5 minute engulfing field here. Okay. So price comes to a point of interest and creates a 5 minute engulfing and a 5 minute engulfing field. Okay, when this happens, it means that reversal is confirmed and therefore you take a trade. All right. Oh, I thought I was recording. Yeah, I'm recording. I'm recording. Okay, I'm recording. No, it is recording, eh? Okay, it is recording. All right, so you see, in this particular case, you are waiting for a 5 minute engulfing and a 5 minute engulfing field, okay? So that this is how the 5 minute engulfing and engulfing field work. Now, that is a first level of entry. And then another low risk entry is a 15 minute engulfing and a 15 minute engulfing field. Okay, this is 1 minute, but I'm using to explain 15 minutes. Assuming you have a 15 minute engulfing, right? But there's no engulfing field here. Then you can switch to 5 minutes to confirm if so. These are the same charts. Okay, this is the same as this. Now here we have only a five. Let's say this is a 15 minute. Okay, and this is also a 5 minute. Now, you realize that on the 15 minutes, we have an engulfing. We have an engulfing, which is this. There's no engulfing field. Compared to this 5 minute has an engulfing and has an engulfing field. But this one has an engulfing 15 minutes, but has no engulfing field. All right. So when you have this, you switch to a 5 minute, one time frame lower, to look for the engulfing field. So we assume that, yes, this 15 minute engulfing, but when you switch to 5 minutes, we have an engulfing field. Okay, this also confirms your entry. So this method is for 15 minutes and 5 minutes with 5 minutes without an engulfing field. Okay, so you have a 5 minute and you switch to 1 minute to find an engulfing, but this one is high risk, so I don't use this. I don't recommend this. Okay, I only recommend low risk, this and this. So 5 minute engulfing and engulfing field, and 15 minute engulfing and 5 minute engulfing field. Okay, so those are the entries that you can use. Okay, so let's go to the chart and see. All right, so now look at gold on 5 minutes. I think that was on Wednesday. Wednesday, Thursday, Wednesday. Okay, so Wednesday there was news. All right, there was news. And inside this news, here at this point, inside this news, here, okay, here, okay, at this particular level, there was a 1 minute QM. Okay, 1 minute QM. So you see, we have a 1 minute QM, which is low, high, lower, low, higher, high. Okay, this is the QM. All right. Now, this is an entry. You can get an entry here. But you see, if you are using the engulfing and engulfing field, 5 minute engulfing and engulfing field, all right, after taking this entry, what are you expecting? If it is going to go up, it will break this engulfing. Okay. If the market is going to go up, it has to break this engulfing. If it doesn't break this engulfing, you cannot have the trade, right? So once price is falling, every time you are looking for an engulfing field, okay? You're looking for a 5 minute engulfing field. So here, look at it. Price couldn't break this engulfing, right? So there's no engulfing field. Now here, price attempted to break that engulfing. He couldn't. There was no engulfing field, right? Now look here. There is an engulfing field. Okay, and there is an engulfing field here too. And that's the first time price created an engulfing field in a downtrend, right? In a downtrend. And since then, it has been creating engulfing fields throughout. Okay, so engulfing and engulfing field have to happen at a reversal point. Okay, so what is the reversal point here? It's a 4-hour QMM. It's a 4-hour QMM. Okay, so we have, is it QMM? Okay, so this first one was a QMM 4-hour, which is this level. So you see, the 4-hour QMM, right? For the 5 minute EG and EF happened there and then went up. And the next one, it came to continue down to this 4-hour engulfing. All right. Okay. So you get it. So 5 minute 5 minute what? EG and EF are entry techniques that you can use. I think it is one of the best entry techniques that I know. It's one of the best that I know. And I think if I had followed it, I wouldn't have lost my money. This money has paid me. Anyway, I'll stop talking about it anyway. So you see here, if I was using 5 minute engulfing and engulfing field, yes, there was no reason to enter because there was no engulfing field here. But you see, now 5 minute engulfing field has happened here. So this is a buy entry rather than a sell entry, but I sold. Okay. So for the EG and EF, do you not wait for price to return to the overlap area? Okay, so let's say there's an EGEF. Let me see if I can have one. EGEF. Okay. So a best example would be a GBP USD. I remember that one. GBP USD H4. Okay. Okay. So is that how it went? Wow. Okay. So EGEF here. Okay, market is in a downtrend, right? So we have an EG and EF here. Okay, we have a level here. Now, price hit the level, created a 30-minute engulfing. Okay, created a 30-minute engulfing. So on this 30-minute engulfing that you're trading, you want a 5-minute EGEF. So you go to 5 minutes, right? So 5 minutes to create an EGEF. Price to create an EGEF, created an EGEF. Okay. You have an EG and an EF. You have an EF here, you have an EG at the top. So once we close below, stop loss is very minimal. So you don't need for price to come up to come back to that. It's about I think it's about 5 pips or so. If you entered here, stop loss will be almost, if I open it, it's 2 pips. Okay, so this one you don't need to wait for price to come back, right? If your stop loss is going to be here. So this is EGEF. It happened after price touched a 30-minute engulfing. Okay, so we can extend this. This one has a 1 hour engulfing. This one has a 1 hour engulfing. So we mark this 1 hour engulfing. Okay, to this level. What do you want? 5-minute EGEF. Do we have it? Okay, so do you have it? 5-minute EG, no EF. Can you see? First 5-minute EG, no EF. Now 5-minute EG and EF. Can you see now? Okay, so now when this candle closed, if the distance from this candle to this is too big, let's say it was good, this will be the 60 pips. So you have to wait for price to come back. So you see, from the EG to your EF, from the EF to your EG to the tip is your entry zone. So now price comes in and you have a sell and your stop loss at the top. Please, is that clear? I think this is the session. Any question? If you have a question, you can unmute yourself and ask. Question? Any question? Yeah, good afternoon. Any question?
It's clear, sir. It's clear, sir.
Clement,
Yes, boss.
question.
Oh, currently no question.
The money that you made yesterday, I have to come and collect my own. Clement was completely buying.
I just was buying. Even BTC the same.
I don't know why I was selling when I called that the market is bearish. It's
Bearish.
bullish.
Yeah. Bullish, yeah.
Yeah, I said bullish, but I was selling because I wanted a pullback.
Yeah.
Anyway.
No, you went against your bias to just do a short sell.
And I didn't, the point is that I entered big.
Yeah. That's the only issue.
I went in. I really went in hard. And since morning, I've not been trading hard.
But yesterday too, gold was funny. The retracements were very minimal.
Yeah.
From that point, and the normal.
Someone is writing on my screen.
Oh, who is that? You should have retraced a bit.
It didn't retrace. It didn't retrace.
No.
Hey, any question? Any question?
Yes, I have a question. Good day, sir.
Hey, you. Why are you asking question here? Are you not in the mentorship?
No, I'm not.
Okay. Question. Go on.
Okay. Thank you very much for the class. First of all,
all right.
I want to ask, like, if I understand, like, you use like the H4 time frame as your major time frame, right?
Yeah.
Then you come down to either the 1 hour or 30 minutes time frame to find an engulfing. Not okay. Then you come down to the 5 minutes time frame to find engulfing and engulfing fill.
Oh, okay. You want information on the engulfing? The information on engulfing, I never taught engulfing in this class.
Oh, okay.
I never taught engulfing in this class. This class we do Bystra.
Right. Okay. Because I was seeing EG and EF. Maybe it's
no, because I use EG and EF. I'm just telling you that when you have no matter what you're trading, whether it is moving average or what, okay, and you want to make an entry, let me try and put moving averages here. Okay, let me clear this and put moving averages. So moving averages. So I'll put 2 moving averages here. I have a moving average strategy. So let me say I have a 48 moving average, exponential, okay, and then a 12 moving average exponential. 12, copy, 12, 12 exponential, okay. All right, so I change this one to which color? To something like this. All right, so let's assume this is my strategy, okay. Let's assume this is my strategy and I'm using it on 1 hour. Okay, so this is my strategy. This is how we call it, CTC, okay, cross, touch, and close, okay, cross, touch, and close. So you see, in this strategy, price has to cross, the moving averages have to cross. So it's moving average crossover, okay, right. Now, moving average crossover, then when it crosses, anytime price touches the moving average, it has to close above. Once price comes and closes above it, okay, and closes above it, I'm going to buy. All right. So now I've not thought this strategy. This is not something I trade, but I'm going to use the same entry technique on it. So once price has crossed, the moving average has crossed, and we are above the moving average, it means you are bullish. Price comes to the 48 moving average, it has to touch. When it touches, I have to wait for price to close above it. You see, it has closed above the 12 moving average. Then it means I'm bullish. So now what I'm looking for is an EGEF. Do you have an EGEF? Yes, we have an EGEF here. Price came again, EGEF. This is an entry. Okay, this is an entry. So if I mark this level, let's say where it touched, okay, I'm supposed to be on 1 hour, sorry. Okay, so here, this is where it touched, okay? This is where it closed above, all right? So now I want an entry. This level came in, never touched. So I have a level. So let's assume that I have this engulfing that came inside, we have touched. I'm supposed to buy, but this is too far, so I'm buying here, or I'm waiting for price to come. So when price came here, if I go to 5 minutes at that level, I should be able to find an EGEF. Okay, I should be able to find an EGEF. So we have an EG where you have an EG, no EF here, EGEF started here. We have an EG here. Okay, then we got an EF somewhere around here when this candle closed above. Okay, so now I have a buy. You get my point now. Now I have a buy zone. So now look at it. Then when I go back to the 1 hour, look at where I entered. Okay, I entered somewhere around here. Okay, and if I'm supposed to hit profit, I would have hit the take profit. So I'm just using the EGEF. It doesn't matter what strategy you are trading, whether Quasimodo, whether Bashra or what. When you have EGEF, it just need to happen when price touches your point of interest. When price touches your point of interest, the EGEF has to happen. Okay. All right. Okay. You just joined. You don't understand EGEF. The video will be uploaded on YouTube. Okay. All right. So can we end it here? Okay. Someone is marking.
I have a question.
Yes, go on.
Yeah, good day.
Good day.
Okay, so what if someone maybe the market is on a bearish trend
Mm-hmm.
and it happened that you saw a CNLC1
SNRC1, it was bearish.
Yeah, sorry, SNRC1. Yeah, the market is bearish, and you see a SNRC1 on 5 minutes. If price pulls back to the SNRC point, can someone enter?
The market is bearish, and the SNRC1, is it bearish or bullish?
Yeah, it's bearish.
Okay, you can enter.
It's bearish. Okay, so.
Because it's within the trend. All right. So
okay,
you see, after I just yesterday, one mistake that I did was that I just how do I say it? I just gave up early. Okay, and it's an advantage to me in a way, right? On good, I just gave up, ended a trade session early. Other than that, there were a lot of trading opportunity that was created after price started pushing above this level. And I was seeing them, but I decided not to take it. Okay, so here, at this point, okay, when this pullback happened, on this 5 minutes, look at the 5 minute engulfing. Okay, look at this 5 minute engulfing. This was a good sell zone because on 1 minute, I think there was a QM or something like that. Okay, 3 minute EGEF, 1 minute QM, something like that. Okay, 1 minute, yes. So on 1 minute, it was still the how do you call it? This is no pattern on 1 minute. All right, but 3 minute EGEF happened, and we are already bullish. So I could have taken this, but I was already down. Couldn't take any trade. All right. So price came in here. Let's go to 15 minutes. All right. So 15 minutes, you see, we have a 15-minute engulfing. Okay, and a 15-minute engulfing failed. All right, engulfing failed. So you see, what the most important thing in all this is the engulfing field. Okay, why engulfing failed? Let's say engulfing, the direction the engulfing is created, okay, tells you that the market is in that strong direction. So if I have a bearish engulfing, I assume that on that time frame the market is bearish. Okay, so once that bearishness that I'm thinking, okay, then the market continues bearish for a while, and then it breaks it. It breaks it. Okay, so the market continues for a while and it breaks it. Once it breaks it, what does it mean? Direction has changed. So in terms of SNL, we're going to have something like this. We're going to have something like this, which is a breakout. So that's the engulfing field. So here, if I change it to a line chart, you see that it's a breakout. You see, you have a breakout. So wherever there's a breakout, there's an engulfing field. Okay, not in all situations. Okay, for instance, here there's a breakout, but there's no engulfing field, right? But when there's a breakout and there's an engulfing field, it's a situation to tell you that the market has changed direction because this is a sell zone now becoming a buy zone. All right. Okay, any other question? No FX question. So we can end it here, right? And this is our last session, okay? Saturday session is
Hello, sir.
Yeah, Amos, go on.
Yeah. Okay. Basically, can you confirm the entry? Because I'm starting to believe that the entry for a breakout is exactly the same for engulfing sell, engulfing fail. Is that correct?
Your question again.
So, yeah. So basically, we have an engulfing fail and an engulfing buy. We have a break of the resistance area above,
Mm-hmm.
and then price comes back in.
Yeah.
And this is what I was mentioning as the overlap area.
Okay. Okay.
And so that would be the entry where the engulfing fail overlaps the engulfing, the engulf.
Yeah.
And this is what I understood as the entry area. You'd be trying to enter somewhere in here.
Okay. So yes, you are right. Okay. So in this case, the simple explanation I was given was that price created an engulfing cell. Okay. So in this case, we have an engulfing cell here.